We have Russell, also very positive. Dow futures positive. So VIX down. Let's go 10-minute VIX. 14.2, pretty low vol. Unless it's going to do a flipperoo on us. Last time we were down this low, we did have an elevated VIX, like going from 14 up to 15, but that happened overnight. So this was Jackson Hole when the VIX just got smashed lower. And we'll see if we go much lower on the day. Take a look at some of our key levels. I still like the idea of selling as high as possible. We're opening up at 81. Market maker move on the day for the SPX. Let's get some levels out there. 28th, 29th, end of the month tomorrow. Key level for me in waterfall income is going to be this 65.35. If we are below this, so we can still rally today, tomorrow, but this market would have to rally about 50 points, and I mean, it's capable of doing that, but profit is sitting at 160. Hopefully, it will stay there through tomorrow. If we get up into 65.25 or so, there's going to be some profit traps there, so we might actually see that today. So let's see here. Andy's in the house. Jason, good morning. Tom, good morning. Greg, Willard, Rick, Louie, Gerald, Peter, Dave, good morning. Mark, good morning. Mark M. had a conversation about you yesterday with Mark B. I want to throw out a daily profit play masterclass next week. Let's circle back and revisit some core strategies and talk about some strategy. Yeah. Hey, Mark, you're good to go, by the way, this morning. Dr. Barnes, good morning. Catherine, good morning. Randy, Sandy, Tandy, just kidding. Chuck, good morning. Oscar, good morning. James, good stuff. Okay, so off we go. Waterfall income, looking at the August 29th expiration. And also for my crash insurance masterclass, I think I'm going to throw in another trade out to Q1 of next year or into April. There's like a March, April expiration in futures, or I can trade the SPY. We'll take a look at that today. SPX waterfall. So I'm back up to 105 bucks, 65% return on the credit. This maxes out at 160 if we stay below 65.25 by tomorrow. If we get up into this profit trap, 65.25, 65.30 is a $500 profit trap. So I don't really want to see price do it today. I'm hoping that price, if it's going to do it, would be trying to squeeze up above 6,500 tomorrow and give this a little bit more of a bonus trap. This could be 160 that end up closing out for credit, which would give me, anywhere between, $100 to $500 of profit on top of the 160. So we'll keep an eye on these, but waterfall income looking pretty good. In fact, all these looking pretty good. So up 110, up 75. This one's out September 30th. It's down a little bit, even though price is higher. I think we're still going to get that pause or turn in September. We're getting hit with some real data once we roll into the new month. We'll see. So, all right. Market maker move on the day. VIX is down. We're looking at maybe, that seems pretty large, plus or minus 47. That seems really large, actually. I mean, we came to Jackson Hole yesterday with 55 points expected. Is this market going to rip, like, now that earnings are in with NVIDIA? Is they going to have like one of those type of days? That's a wide error. So anyway, well, plus minus 47. I think a lot of that was due to NVIDIA earnings. So if that's a bit of a lackluster move, this might drop significantly, but keep this in mind. So we'll make a note on the workspace here. So plus minus 48 points. Okay, and then we're at a VIX of 14.16. So maybe a 0.88% move. And we'll measure out the 50, 100% ATRs as well. So 0.88 puts me up into 65.35, 65.35 to 65.40. Potential high based on yesterday's close. Even though we don't see the liquidity levels above 65, it kind of firm at 6,400. Is it possible to be firm at 6,490 and then fall back down to this positive negative gamma flip zone, 64.65? Yes, no, maybe so. We'll find out. And then 0.88 down here to around 64.25. 64.25 to 64.20. Potential bottom based on yesterday's close. Okay. So let's see. Sandy says, does Snap will lose some money by Friday? Did you not get assigned? I was assigned, Catherine mentioned that earlier this week. I was assigned 100 shares of Snapchat. I'm keeping those shares. My break even's now like 760. If you didn't get assigned, and yeah, I would just take the loss of 24 cents or whatever it was filled at. I think we took a 76 cents credit. So I just take the 24 cents loss. I wouldn't worry about it. Yeah, if break even 733, that's good. The reason mine's 762 or 767 is because I had a previous 100 shares. Okay. So you're losing more then? Or did you pay like very little for that call debit spread? What'd you get? So call debit spread. So you did a buy call, sell call. What'd you pay for that? Did you pay like 25 cents for it? Because our credit spread was filled at 76 cents on a dollar wide. So we only lost 24 cents. But I'm going to keep the shares. I'm going to see if we can, get Snapchat back up to $9 or $10 and I'll flip it for a couple bucks. Paid 45. Okay. No. I mean, you're down 55 cents. I wouldn't sweat it. I mean, you can't do anything. There's no backup plan with the debit spread. I wouldn't roll that for an additional debit and hold that thing longer. It's like take the 55 cents and it didn't work out. So, or I guess 45 cents, right? You lose 45 cents. Yeah, but there's not really a backup plan on a debit spread unless you want to roll it for another debit, which I wouldn't do. I'm looking to see if Snap will, figure out a way to climb off these lows. I mean, we've got some pretty strong support here the last couple of years. It's kind of similar to Intel. I mean, obviously, Snap's probably not going to be bought by the U.S. government like we did on Intel. So, Intel's been performing pretty well, back up to like $24, $25. It's nothing more than a range trade. Going back from like, $19 up to 25 is a pretty good rip. Snapchat probably isn't going to have the same type of love, but if we could go from 7 to 15, 7 to 16, that'd be a great run. All I'm trying to do is repair. I know this could run up to like $15, $16. I know there's a gap up here to $20, but I'm just repairing it, meaning my break even's in the sevens. I'm trying to get it called away at 9 or 10. I'll take the profit. I'll be up like $300. So rather than losing, I'll just flip it for repair for like $300, and that might be like December, January this year. Okay. All right. Let's see here. Trending Thursday. Let's take a look at the heat map. We had some GDP numbers this morning as well as unemployment claims. So GDP came out 3.3, forecasted 3.1. Previous was 3%. Unemployment claims came in pretty much as expected. 234 was a revision down from 235. Prelim as expected. Tomorrow we have core PCE. This will be an interesting way to close out the week. Month over month, year over year. I'm expecting this to go higher. I mean, the market might have a bit of a moment if PCE comes in lower, but I wouldn't be shocked to see it come in, higher than expected. So here's tomorrow, 8:30 a.m. Core PCE month over month forecast at 0.3. They do a pretty magical job of it comes in exactly as forecast on the monthly. It's still higher though. And then year over year, we had a previous at 2.8, forecast at 2.9. If this prints 3%, I don't know why the market would take that as a good thing. Yes, the Fed's going to cut rates in September. The tone of Jerome Powell will be interesting. Plus, we'll have jobs numbers, more inflation data, and it might be like an odd, like hawkish cut where the message is, look, we're cutting. We recognize the softness in the labor market, but If they want to like stick to this inflation narrative, then um, I don't know. And right now, there's like a whole power struggle between the Fed being filled with yes men and sycophants, and the Fed being filled with academics. They don't agree, and this is probably the most dissent I've seen in the Fed in the last decade. So we'll see. I mean, it's this is what I'm saying. Like September is like a big reality check that the market's gonna have to survive. I think technically we're still due for a correction. I think we get one. It just I think a correction is better than this thing rolls over hard. I don't think the market rolls over hard unless it's just so much more focus on the consumer. Um, Main Street could be breaking. I mean, I think people are stretched pretty thin. Listened to some podcasts last night, and the housing market is showing signs like realtors are complaining about having zero transactions. House prices are going down for existing homes. New homes are still being built. There's a bit of a supply. I'm not gonna say glut yet, but you're building and having supply catch up while people aren't buying or aren't being approved to buy. People are pushing back when they can buy homes, when they can have families, when they get married. There's a lot of shifts going on demographically. So anyway, but the consumer, if the consumer cracks, also what is weird is the Fed is actually servicing debt at like 3.35%. Go find 3.35% anywhere in the world right now. You can't. Like nobody can go get their debt serviced at 3.35%. So thanks to private equity, I think that's another reason that we're making this big push into private equities. You can just kind of it's funny money. Like you can mark to market whatever you want and eliminate the volatility, charge a 2 and 20, and say that this has been steady returns with no volatility for X amount of years and see who else wants to pay for it. If you want to get a good example of private equity, watch the movie Arbitrage with Richard Gere, minus the murder that's in that movie. How he does a business deal with a garbage company that's full of like criminal accounting. That's private equity. I think there's actually a lot of that. There's some truth to that. So anyway, what's up, Mike? How are you, man? So 6481 futures pointed slightly higher. I'm actually going to go to this futures workspace. So we're at 14.17. Let's go into, I've got a futures workspace here. See if we just made a bit of a flip this morning. Because like I said, NASDAQ futures were a little bit red until I came to the session. So we just had a little bit of a move higher. This probably candle was the 8:30 news. So that's 4 p.m. A little bit of a shakeout. Yeah, I mean, we've been grinding higher. This is on the 1 hour chart. Let's look at the 5-minute chart, the last 2 hours. So came down to the weekly VWAP, 64.91. Now it's up to 65. NASDAQ futures since 7 o'clock. There's your 8:30 news. Market jumped up a little bit. 23,600 up. I mean, it's up 40 to 50 points after the news. So futures jumping, pointing higher. Directionally, wouldn't be terribly surprised to see the market, pointed up for the day. Another melt up type day. 48 points seems a little excessive though, without having some major catalyst on the books today. But I think that was Nvidia earnings, and Nvidia overnight. They did beat top and bottom. Price is down slightly, so it might be, a low volatility day on Nvidia, but one never knows. It could be just this big flow of stuff today, whether it's good or bad. But they beat top and bottom. So estimated $1 earnings per share came in at 105. I don't know, standardized 107. There's all sorts of numbers that came out yesterday. I saw like 12 prints at like 4:15 p.m. And then revenue report, there was a surprise. We estimated 46.05 billion, came in 46.74. The numbers are huge. Like NVIDIA continues to impress with big numbers. It's going to get harder and harder to continue to outperform and get these like gangbuster moves. But the last 16 earnings, 12 times they hit the expected move. So I did take some trades yesterday. I put one in for newsbreakers, and we're looking to see if we can at least hit the expected move into September, and hopefully get a few bucks in that trade. Okay. I would say the way that the market's going to close this week would be dependent on probably NVIDIA going slightly higher today, tomorrow. or slightly lower today, tomorrow. I think that's really going to be the direction that we take. So far, we are just clinging to every little bullish uh, tick we can get. S&P just trying so hard, right? 21 average support. Timing wise, do we roll into September? That would be about a 2.9% correction coming back to this 50-day moving average. If we pull back 50-day, question is it bought right there? Or does it come back to previous all-time highs, which is around the 23% fib as well as the 100 pullback? So here's a 50-day moving average. Here's a 100-day moving average. We will see if price is going to continue to melt up higher. Okay, let me see if I have a decent call wall for today. So 0 DTE, mostly leaning to the upside. Pretty firm at 64.90 if that acts as resistance. We'll see how this fills up through the day. 64.90 if it acts as resistance and fails, that's just poking all-time highs like we did yesterday, poking again, maybe giving some back. We've got a positive negative gamma flip zone here at 64.65. If we stay above that, basically we stay above. Here's one way to look about this. If you have this software, this positive negative gamma flip zone, what this means is if we're greater than this, so if we're greater than this line, that is positive gamma. Okay. So put this as a line in the sand. If we're above this line as positive gamma, basically that means that as prices going higher, people are selling calls. As prices going lower, people are buying shares. So it's a lower volatility. It's a suppressed volatility environment when you have positive gamma. When you have negative gamma, this is when you're starting to see shares being sold and it's forcing market makers to buy them back. This is usually when you get a lot more volatility. Bigger moves to the downside, bigger swings both ways. It's interesting how it kind of both results in there's forced buying in the market. Okay. But the swings in volatility when we go into negative gamma are a lot more apparent. You can see much bigger intraday moves. You'll see more gaps to the downside. And, when the market rolls over a little bit, you typically see like maybe one or two down days that you can see in the markets like intraday. And then you'll see gaps lower, and see how persistent that is. We haven't had much of that this year, right? Since the bottom in April, this market has been just slight gaps higher, melt up higher, drift higher, and it's been doing that since literally the bottom in April. The major catalysts and the thrusts we've had in the market have been the U.S.-China trade agreement pause, the ceasefire in the Middle East, and I guess CPI and Jackson Hole. Like those are the big thrusts we've seen. Like what I do just say four like catalyst thrusts in the last like 5 months, and the market just pivoted hard. So anyway, positive, negative gamma. Positive gamma, you'll just see slower movement. Negative gamma, things get a little bit more exciting. Still stick to the rules, still stick to the process. Highs today, potential top around 65.35 if we get there. Oops, what was that? Open that one up again. There we go. Nasdaq set to open flat. Nvidia slips on China market uncertainty. Well, I mean, what slip? It's down like 30 cents. Files lawsuit against President Trump. Oh boy. Noise. Okay. We have 6 minutes for the open. Nvidia is down about $1 this morning. Okay. About $1 this morning. VIX sitting here near the lows. It would be interesting to see. I mean, Jackson Hole went to highs. We had a bit of a pullback. That was your Jackson Hole push. It paused. We did push back down the next day. So looking at something similar, if we're back down to these same lows, do we actually see the VIX go up today and maybe fill this gap and have like a 14 to 15 VIX? So if I can get a decent fill, I'll probably go 5 wide on. That's a firm level. I'm going to see what I can get for maybe like the 90. or the 95. So I might take a stab and just, I mean, I'm going to let a couple trades marinate, but if I can do like a 64.90 call by 95 and then maybe a 65, I think there's enough in there that I could get some premium for it. Or if I want to stay safer, just sell like 65 or higher. So don't get into the trenches here where price can possibly hit, but we could obviously get a good fill there if we're going to see rejection. But I'm clearly like getting into where prices could hit and maybe threaten a position. So that's why I want to keep the width a little bit smaller. Okay. But the nice thing is because we're up to 64.81, if I can sell, 6,500, I don't really see much up here. So I kind of like to see that like 64.90 or 64.95 or 6,500 would act as some type of resistance today, even if the market is, slow. If we, hit here and then fade, or we fall first and then we rally, either one can happen, obviously. But if I can get an open, we get some rejection off of these levels and we don't go too much higher than 65, see if we fall. I'm going to pull up one more thing and see what this looks like. This would be looking at some data on my Delta flow. This is doing SPX. Oh, interesting. So I've got for today, when is this? 4 p.m. Delta flow. I haven't seen this before. What chart is this? What chart is this? Is this a 358 for? So this is like a 2-minute chart. All right. That seems a little aggressive. I don't know. I'll check out a video on this and see if I can make some sense of it. But going into 0 DT negative delta, that would suggest that that carries on for today. I'm more interested in market maker exposure and where the call walls are. Big resistance here, 64.80 and 64.85. I am surprised to see this market maker positions is so quiet. We have a 6,500, but today 64.80. So between like 80, 85, that's a pretty sticky level. And there's not much below. We do have a little bit above like 65, 65.05. That's about it. So we'll see. It's going to make for an interesting open. NVIDIA sell puts today. I've already had positions on it. I mean, I've got a ratio spread out like 140 by 130 by 120, or 150 by 140 by 130. I've already got some exposure on NVIDIA. So, I mean, earnings is just kind of a drop in the bucket. Halted on, hey, what's up, Walgreens? Walgreens making a charge. That's pretty cool. Walgreens up above the 200 moving average. If we get a gap fill here, I'm going to have about a $20,000 profit. Let's go, Walgreens. They got taken out of the S&P and looks like the stock is performing better. So chart alarm set at 15. Let's see. I'd love to see some squeeze action on Walgreens. NVIDIA puts, I mean, I would give this a chance to pull back. I think if we pull back 23, 30%, 23, 30, 38%, previous all-time highs, this is my pullback zone. If I want to establish new positions on NVIDIA, it would be, down here. At this point, I would be selling calls. I would have a collar trade. We talked about this yesterday. You sell a call, you buy a put, you're protected to the downside if it gets called away. You had 100 and some percent rally. Protect your profit. You can always reestablish positions. I just don't see technically how this stock and everything else can keep sustaining this type of run. So I think we have a reality check into September, and we probably roll over a little bit. And if we rotate away from tech and rotate away from Mag 7, NVIDIA is going to feel it. There's lots of leverage on it. Okay. Mag 7 will feel it. Qs will probably feel it. So anyway, all right. It's opening bell. Let's check the plus minus because I felt like that 48 points is kind of a lot. And let's go back to SPX on the day. Let's have a look. Right now for the 28th, still showing plus or minus 42. That is still a lot, man. Now we're down to 33. Well, big shift. Now we're down to 20. Big shift. Okay. I think that was anticipation of NVIDIA earnings. All right. So for the 65s, I can get a pretty good fill. Well, I mean, hell, we gapped higher. 0.08 on futures. We're ripping right to the upside. Let me see if I can get, how high can I get for the deltas on 65s? I'm going to try 65.10. Let's see here. So that's a 15 delta. See, let's try to move this up a little bit. Let's go $1.60, $1.15. Let's try a dollar. Let me tighten this up a little bit. Where can I get a buck? 90 cents, $1.15. Okay, this isn't too bad. So if I go 10 and 15, I get $1.20. All right, I'm going to take this trade here for $1.25, maybe. $1.25. See if I can get this one to sell. Filled at $1.25. I'm in for a bear call spread 65.10, 65.15. I'm going to try the 20 by 25 for another. Let's try another $1.25 in this one. So that's pending. So I got to trade in 65.20 by 65.25 or $1.25. That's going to be posted. That's a bear call spread. We're opening up to the 50% ATR is 65.05. So daily profit play, I'm getting filled on a 5-wide credit spread. Typing it in right now. New trade SPX. Today's the 28th. Nope. Yeah, 28th. And I sold the 65.20 and the 65.25. Got filled for $1.25. Or yeah, 65.10 by 15. Sorry. 10 call by 65, 15 call for $1.25 credit. Okay, so that trades in. The other one, I'm doing a 65.20 by 25, trying to get filled at the same level. So I'll edit this one to filled, pending order. Try to get filled for a slightly higher credit spread at $1.25. So what I'm looking for on the day is, will we see some level of resistance? So there is a 50% ATR right here. My largest gamma level is at 64.90, which we're at it right now. If this, continues to go up, we hit the 50. Do we pull back? Is there some type of resistance at 6,500? Do we hit it and reject from it? So I've got a little bit of wiggle room there. We're trying to go higher. Let me check my waterfall income. This trade expires tomorrow. So right now it's up $77. We still have that profit trap at 65.30. So 65.25, 65.30 is a $500 profit trap. Our risk would come in all the way. We'd have to go to 65.40 for us to have a threat on that trade for Friday. Okay, so I will edit this for bear call spread. That trades in for $1.25. The other one's pending for $1.25, trading at 65 cents. Okay, so it's in Telegram for members, Bill. Daily profit alerts pending. So this is my filled trade. This is my pending trade. It's in your Telegram. Let's see how that one works out. I'm just going to start out there for the morning. Obviously, price is higher. If you jumped right in with the futures market going up and put in a bull put spread, you're getting a quick thrust in direction. So if you jumped right into sell a put, buy a put, you got that first 5-minute candle, you can probably see some quick profit there. But you got to be in and out pretty fast. Okay. If this turns the corner where we are coming into that resistance level, I mean, one thing I'm noticing day to day is if this gamma doesn't fill, right? So right now, like my largest gamma level is at 64.90. If it doesn't get higher at 65, doesn't get higher at 65.05, this is probably resistance. Okay. And one thing I will be noticing is, if these are checked, let's say the brokers can see like, okay, price comes up here, it gets checked. Do we end up refilling some of these liquidity levels to the downside? Maybe. Remember what we saw rejecting though? We saw like a 40 plus point move because of that NVIDIA earnings, and it dropped all the way down to 20 plus. So now our plus minus on the day is all the way down to like 20 points. Okay. So is my trade still in jeopardy? I mean, possibly. But for my top on the day, I don't think that we go too much higher than this. So if we do, in fact, I mean, what would be great would just be seeing price fall back down to like 64.55 or 64, 70 or 64.65. Try to come back and, I don't know, just fall a little bit. But if we get up into, 65.10, 65.20, I'm going to try to sell this thing nice and high and see if there's any type of price action there. Rick, if you have lifetime VIP, are you like all access diamond? You should definitely have Telegram for daily profit play. Was that a bear call, Tom? 65, 10, 20, 210 out at 175. That was quick. Call combo 175. Bear call combo, Greg, 175 out at 125. Very good. Yeah, that's fast. So, I mean, my trade is $1.25 currently trading for $40. Of this, if I can pull, 80, 90, $100, I'll take the win. So I'm going to set a take profit here at 0.25 debit. So if I can pull $100 out of it, I'd be pretty happy. Let's see if price falls. And how high can I go? If I did like a 25, I mean, going 10 wide here, I don't think we go too much higher than this. So 30 and 40, I get 30 cents. Maybe I can get this one filled for another $2. We'll see. I'll try this. I'm going to do 25, 35 for, let's say, $2. It's 25, 35, and then a 30, 40 for $2. Put in some more pending orders. The easy trade in the day would be that we just reject 64.90 and we can't get much higher. We respect that 6,500 call wall and we start to roll over a little bit. NVIDIA is slightly giving us a green candle. It's down from yesterday's close, down briefly. I mean, market makers expected like a 11-point move. It hasn't really moved anywhere. So we've still seen like a lackluster delivery on prices moving post earnings. So, I mean, again, does NVIDIA get a push back up to all-time highs? Do we poke and stay? Do we have resistance here and we continue to, go sideways or maybe fall in the coming weeks? Okay. So for right now, just in one trade, 125 credit up about $45. I'll let this one continue to go. Hopefully price cooperates and starts to go sideways or down. That gets us paid a lot faster. If price goes up, I still have pending orders. The 65.20 by 25 is still pending for $1.25. I'm going up a little bit higher, going 10 wide. 65.25 by 35 for $2. and 65, 30, and 40 for $2 and see how those can play out. The 50% ATR is 65.05. So my kind of threat level today would be futures, VIX. Okay, my threat level today would be 65, 10, and 20. So horizontal ray, 65, 10, and 20. Okay, so I'd like to see price stay below that. And I'll just change this to black. Black. There we go. So I'd like to see price staying below these two lines today. If we, hit 6,500, that's fine. I just want to see price getting back below 6,490. Easier trade is we poke this level and we start to fall back down into this positive negative gamma flip zone. Okay. If this turns red, if this price action turns red, that should be helping our bear call spread. Okay, so that plus minus 48 points has now been modified to about 20 points on the day. Now it's plus minus 19.6. Plus minus 19.6. So I think the market was anticipating like a big directional move and gap with NVIDIA earnings. It was just that implied volatility, and that's that implied volatility crush that tends to happen with highly anticipated earnings. Okay, let me check on waterfall income for that trade. This one, now it's up 110 bucks, 115 bucks. If anybody's in my waterfall income for this Friday expiration, if you want to take the profit, you're up 72% of that max credit. You can take the profit. It's totally fine. I'm rolling the dice a little bit because going into tomorrow's expiration, 65.35 is now trading for about a 13 delta. We've gone up from about a 78% chance of profit in this one to now about a 87% chance of profit in this one so far. Now, if price obviously pushes up to like 6,500, 65.05, that's going to decrease our probability because it's going to increase our current delta. But this is still a profit trap. And this trade, so 25 to 30 is worth a $500 profit trap. 35 by 50 is my risk. Okay. So if price goes down, we have 160. And that's fine. And I'm going to try to keep as much of that as I can by tomorrow. If price goes up a little bit, then I'm going to play the game with the profit trap and the timing of this income and expiration tomorrow. The end result's most likely going to be, I would think like the 160 credit's going to be the end result. Okay. How's everybody doing this morning? We in some trades. My bear call spread's up about 36% right now. This call condor is looking better. If I see this trading for like 145 or 150 today, I can close this thing down for like a 10 or 15 cent debit. I might just take the profit and not worry about the risk tomorrow. Although I can look back in hindsight and be like, oh, we could have. I mean, you don't trade that way. If I'm going to take the profit, I'm going to be happy with the profit. So this one being up 110 bucks, this one being up 75, $80. We also gave ourselves another, the S&P would have to go up over 200 points in the next 23 days. Not saying that it can't happen, but it's probably pretty slim. That's another 125 bucks. And then this one out to the end of September is 66.40. So this one is upside down a little bit because there's more time. But I think if the market has a decent pause or pullback, that this one will also be looking pretty good. And then strategy two. If you'd like to join me for a masterclass, I did a 3-day workshop last week on waterfall income. I'm going to throw in another masterclass tomorrow at 1:30 p.m. Okay. So I'll talk about some waterfall here in a moment. I've got 2 trades I'd like to look at. So crash insurance masterclass. This is an inexpensive class. It's like $197. And this is how I look at protecting my portfolio. I saw this yesterday. I think there's it could be just a waste of money. Okay, meaning like this trade that I might put on here could be a waste of money, but I want to show you the hedge. Okay, if I go into, let me go ES. Okay, so we're trading at 6,500. Now, if this market rolls over aggressively, okay, aggressively, and I think the vulnerable windows for the market would be if we have like bad data September and it rolls over September to December into Q1 of next year. How ugly does it get? I don't know, but if this thing were to come back down to like 5,200 or lower or 5,100 or lower, I'm going to take a super cheap hedge. Okay. So here's what the numbers look like. If I were to hedge out in the futures market out to, I can go April or May of 2026. Now that's out there quite a ways, but it's pretty cheap to take this play. So if I went out to 5,000 or even 5,100, so let's go a little bit cheaper. I'm going to go 5,000. And it might actually be cheaper to play the futures. Let's see. So I can risk $500 to make $9,500. That's okay. I'm going to see if I can do something better on maybe SPX. If I can go out that far in SPX, I'm going to see what the better reward to risk scenario is. SPX going out to April or May. So I can only go 100 wide there. It's same. So I get a slightly better setup on futures. If I go SPY, I guess SPYs are Qs. It just depends on how, if this market rolls away from, tech and AI, like we do have a bit of a bubble here. But I don't know. I don't think the bubble's that big. I think it's more like, do we break consumer? Let's go to March. I can go March on the SPY. That's annoying. I can go out to March. I want to go out farther. June. So let's go June 500. Okay, this probably gives me a similar setup here. So I'm risking $400 to make nine. I actually get a better trade on this on the SPY. Okay, this is a way better trade. I'm gonna take a hedge trade for my crash insurance masterclass on the SPY. I can buy a 500 put, and I can sell a 345 or a three. I mean, this is pretty solid. I can risk $500 to make up to $15,000. Now, I don't plan on making $15,000 because that would have to take me all the way to expiration. But if we go 15,500 divided by the 503, I mean, that's a 30-to-1 hedge. That's not bad. If I want to take this down under 500 with commissions and everything, I can risk, 500 to make 15,000. So 15,000 risk 500. That's a 30-to-1 hedge. I hate this trade because it's probably not going to work, but I love this trade because it's such a tiny little risk. I mean, I risk 500. That's less than 1% by a long shot. That's like a quarter 1%. That's pretty much my math for all my hedges is try to get like 20-to-1, 30-to-1, 40-to-1, risk like a quarter 1%. But I think this is an important trade to have just in case. If we see like a big volatility event and the volatility spikes, the nice part is like a 500 by 345 is wide enough that I should see the benefit of this low risk, high reward trade. I don't have to take $15,000 of profit, but I could probably turn this $500 risk into maybe $2,000, $3,000, $4,000 of profit. So I'm going to take this trade at hopefully like a 495 debit. 495 debit. And it's kind of the cost of doing business, but I think this also offers a huge upside if the market does not cooperate. So I'll take this for up to $5, but it should be no more than that. So I'm going to put this in for all of my accounts. Let's go at the mid price at 497, see if that will take 498. I don't want to pay more than $5. So I'm going to try to get this in pretty soon. 498. All right, 4.99. Come on, be a pal. Film at $5. Oh my gosh. All right, well, I'm gonna let it, I guess, pend unless I get filled at 501. All right, filled at $5. So similar. All right, I'm filled at $5. Now I'm going in. Everyone's gonna get this hedge. So $5. I'll go 501. I just want to get all these filled. I'm gonna let this marinate for $5. Okay, so similar. All right, so I'm just taking a moment here. Our bear call spread should be looking great, by the way. Price is dropping pretty nicely. I'm just getting some pending orders in. And I'll post this. I'll make this an official alert for my crash insurance masterclass. So $5 pending. $5 pending. 907.2. Make sure I didn't duplicate that. Okay. See, 5234. All right. Just going through, getting these hedge orders placed and pending. Okay, almost there. So that's pending. That's pending. That's pending. Pending. And pending. Okay. All right. So I'm going to set this up. This is going to be sent out for Crash Insurance Masterclass. Deanna will post this in our chat right here. This will be Crash Insurance Masterclass, new trade, SPY going out to June 18th of 2026. So it's way out there in the distance. I'm buying the 500 put, selling the 345 put, and $5 debit. This is max risk, $5. Max profit would be 1555. So 15,500. Okay. So inexpensive hedge, but in case price rolls over and we see S&P falling back to, 570, 550, 500, or kind of worst case back to April 2025 lows. This is a 30 to 1 payout. All right. So that's been posted. Okay, this account hedges. I'll take that trade. So here, all right. So all pending there. Let's check on SPX. Should be looking at a decent amount of profit for SPX this morning. Bear call spread is up $85, $90. I've got a debit set at 25 cents. We're trading at 40 cents right now. So we might actually hit that profit pretty quickly. If I can grab a quick $100 out of that 125. The other way is I just let it sit all day and hope that price does not come back up to 65.10, which is okay. I mean, the probability of profit on the trade is now up to about 90%. Okay. This also, but again, it's like if I can grab, $100 here, and I can also get this 100. I mean, look at my waterfall income. My 160 is now trading for 135. If I can pull this out for 145, 150, I'll just take the profit there. Yeah, price is falling pretty nicely. Good stuff, David. Bear call closer profit. Very good. Did you get filled at the 25 cents, or did you close that a little bit early? I'm at 32 cents debit right now. So my trade's up about $95. I'm trying to get this close out for an even 25-cent debit, which would give me $100. 35 cents. Okay, good. Nice win, man. That's a good win. Let's see. So we're close. I'm going to move this down to, yeah, I think just 25 cents is good. If I move it down 5 cents, that would give me, I cover the fees. I'll make a, net $100 today. It'd be like $102. Actually, it should be more than that. It'd be like $104, $103.80, $103.80. I'll leave it at 25 right now. Let's let the broker do its work. How to calculate how many SPY bear puts needed to hedge 100K account. Do you want to hedge the entire 100K, Jason? I mean, I think that's a little aggressive. I mean, if anything, it's like, are you fully invested? Number one, are you fully invested for 100K? Because if you're fully invested for 100K, then sure, a hedge for the entire 100K, right? But otherwise, I mean, all you're really trying to do is offset. I mean, what would be, so if I had a 100K account and I can make 5 or 10 grand, that's a hedge that covers 5 or 10% drawdown. Does that make sense? So like, how bad does the market actually get? Is the market going to fall 20%? Is the market going to fall 25, 30%? That's kind of the way I look at a hedge. Like, how much hedge do I need? Do I need to hedge a full 100%? That'd be like the market goes to zero, I lose all my money if you're fully invested. The reality is hedges for me, I typically pay less than 1%. If I'm hedging anywhere between a 5 and 10% move, that's kind of my hedge. I think if we can, let's say the market has a drawdown of 10%. If we can cover 5 or 7% of that drawdown in a hedge, we're going to take our costs and reduce the size of our drawdown dramatically. The market goes down 10%. We hedge that. We're only down maybe 2 or 3%. You can survive a lot of, I mean, you have to understand a bear market is so few and far between. And right now, this is like not the environment where we have bear markets. It is as doom and gloomy as it might seem. It's like, I don't know, other than maybe a major policy change in 2026, if Trump and company lose all power in 2026 and the midterm swings totally the opposite way, then I could see that everything we've done this year gets all taken back. I think the big surprise also could be, and this is like the scary part. If we see that the Fed cuts rates in September, but the long end of the curve does not budge, you're going to have an entire world looking to refinance, understanding that global yields aren't going down. That might cause some streaks in the pants a little bit. So as near term as like September onwards, or as I'd say medium term as like the midterms next year, because I don't think the policy is going to shift necessarily. So anyway, my point is on the hedge is like, I'm not trying to hedge a full 100K account. I'm trying to hedge the percentage drawdown. If I think the market can pull back 10, 15, 20%, I'm trying to hedge that, right? And that way, when your equity curve So whatever you do have invested, like your equity curve, if you have your P&L, so let's say from a 100K account, the market's up here, okay? And then the market pulls back 10%. Well, if I can be hedged for, let's say, 5% of that move, well, my drawdown in my equity curve, it looks like this. Like it barely goes down. So I'm not down point for point with the market. I'm actually taking a fraction of the drawdown. And then if I'm reestablishing new positions with some dry powder and we start to go back up, I can get to all-time highs way faster by having those hedges in place. Right? So I use hedges to reduce the overall drawdown and fight through these pockets of pullbacks. That's what I'm looking for. If I want to hedge the entire portfolio, then the nice way to do it on the Tasty Trade account is make this a delta neutral position. If you had this is beta weighted delta. This is your correlation with the market, like the S&P. So if I push this back down to 0, that would mean that regardless of what the market does, I'm essentially equal sides. Okay. And clearly I'm not equal sides. I have the reason that I've got 2800 is because a lot of these accounts are tilted slightly positive beta weighted delta. All that means is I have naked puts. If I have a naked put, that's a 1 delta. Okay. So I've got some naked puts, I've got some ratio spreads, but mechanically they're way out in the distance. My project options edge, we got a lot of ratio spreads, we got a lot of open positions, but they're like 95% chance of profit, 92% chance of profit, 90% chance of profit. So even having this beta weighted delta, I don't think I'm that tilted. I'm giving myself lots of wiggle room, lots of defined risk trades. And yeah. So anyway, that's where we're at. But if you want to hedge the entire thing, you get this beta weighted delta to 0, and you're essentially truly delta neutral, which is a pretty cool portfolio because that way direction shouldn't hurt you as badly, up or down. Right. But I think we can agree we've been in a pretty good bull market since April. So having a slight tilt to the upside has favored those gains. Yep. So if you wanted to hedge, you're just going into, you want to make sure you're going into negative delta. So if I put that trade back on, I'll show you that. So if I go SPY, put that trade out for, we did a trade out to June, right? So if I buy the 500, and I sell the 345, I did that for that $500 max risk. What you can see here is that's a negative 7 delta, negative 7.5. So if I wanted to hedge this entire portfolio, I would have to do probably, I don't know, 100 contracts or so, maybe more. So if I did this across the board, I'd have to evenly distribute this across my accounts. But roughly speaking, if I had a 100 delta, okay, I guess it'd be like 150 delta. Okay, so I have to do about 3 of these. So that's 133 contracts. That's 1,000 negative delta. So if I did that, so I'd have to do what, 399 contracts between all these accounts, and I would be truly delta neutral. And that's fine because what's my overall risk? Well, I'd be risking $66,000, which means I could totally lose that, but my max profit would be enough to cover all my remaining buying power or close to it. And that would in essence be like a big way to hedge my entire portfolio. But a hedge also is such a long shot. Like to get 30 to 1, the probability is crazy low. It's a 6% chance of profit. So I don't want to hedge the entire portfolio. I want to hedge chunks of it. Okay. All right. That's a good question. Larry, I see your question there. I think I know the answer, but can you explain why you do ratio spreads instead of just a put sell? Yes. What would you like to look at for a naked put, Larry? Give me a ticker. This is a really good question. So ratio spreads are one of my favorite ways to trade. Instead of just doing a naked put, I like to do ratio spreads. Robinhood, perfect. Okay. So Robinhood, give me a strike price that you'd be interested in owning Robinhood. Okay, Jason says Tesla. All right, we'll do 2. Stop there. So Robinhood, Tesla. Now give me a strike price that you'd be interested in owning. Okay, Larry says 85. So if we looked at an 85 sell put, okay, 85 sell put on Robinhood, how far out you want to go? You have a certain credit in mind? Or it doesn't really matter? You're just willing to own it there? Let's see. Let's go out like maybe, I mean, if take a rule of thumb from Tasty, go out like 45 days. If I did the October 10th on Robinhood, sold at 85, number one, that strike's not even available, which is that's weak sauce. So let's go out another expiration. October 17th, 85. Okay. So I can sell an 85 put. Okay. I can sell an 85 put. Now, we'll go out 50 days just for fun. Okay. We'll go out 85 days. Now, what I'm going to look at here from just a naked put is, yes, I can pull $2.50 for this trade, right? So I can get $2.55 credit, which means I'll keep $255 of income as long as Robinhood stays above $85 by October 17th, which means this price could drop from 104 down to 85. That's about a 20% drop to the downside. But my delta is 17.53. I just want to show you the difference. If I did a ratio spread, if I were to buy the 90 and sell the 85, I pull in less credit. Okay, I pull in less credit, but I lower my delta by 7. So the reason I do ratio spreads is this gives me a potential buffer. Okay, so what's your break even? If you did the naked put at 85, okay, if you did the cash secured put or naked put at 85, I pull in 255. Okay, so the strike is $85. If I got assigned on Robinhood, I'd own the shares at 82.45. Fair? So if I get assigned, I own shares of Robinhood at 82.45. Cool. Spy filled. Okay, those are those hedges getting filled. Good. I want those filled. So my break even on the naked put would be 82.45. If it did a ratio spread, I buy the 90, I sell the 85 with 2 contracts. All that means is I have one naked put still left at 85. I pull in $1.60. Okay. So I pull in 85 as my strike. I pull in $1.60 credit. And if I get assigned, I still get a $5 buffer on the 90 by 85 bear put spread. Now my break even goes from 82 and change to now 78.40. So the reason I like a ratio spread a little bit more is because my break even is usually lower due to that bear put spread profit trap. So the way this looks on the risk graph is here's live price. Price can fall, okay? And then there's my pin price. There's my risk. So what I can take on this is I have my credit, and this would be if price is at 90 and price is at 85, I can make $100, $200, $300, $400, $500 on that profit trap if price is right around this 90 to 85 zone by expiration. Okay. If it's at 84, 83, 82, 81, 80, I still don't take on any risk until we're below $80. My break even on ownership would be 78.40. So I get a $4 improvement on my break even. And I'm only sacrificing about $1 credit. So I'll sacrifice that dollar credit to lower my cost basis. If I'm willing to own the shares by $4, I can lower my cost basis. So I can set myself up for a better starting point to repair the trade. That's why I like to do ratio spreads. That's why my Project Options Edge, we do, a decent amount of ratio spreads. But that's where the profit trap comes in. Okay, because if you just did a naked put, it looks like this. All right, those hedges are getting filled now. Good. All getting filled at 5. Excellent. Okay, so a naked put would look like this. I pull in all this credit. So I pull in $2.55. But once we cross 85, my break even is 82.50, and then I have all my risk. So that's my zero line. This would be 85. I still collect that 255. There's my break even around 82.45. And then below that, it's all risk. Okay, there's my risk. So there's no little profit trap here. That's the difference between a ratio spread and a naked put or a cash secured put. But to me, the big differentiator is I'll sacrifice the extra dollar of income, but I can lower my cost basis by $4. Yeah, but like I said, the one thing too is if you can lower your delta because you have that long put component, it lowers your delta quite a bit as well. And that way, the price isn't as sensitive. Like when the market drops aggressively, yes, you still have a naked put, but you have that bear put spread that will help like reduce the volatility and the threat. So I don't know. It's just all in all, mechanically, I still use ratio spreads like I'm going to own the shares. Okay, so I rarely use ratio spreads. I'm like, yeah, I'll just manage my put side and take like a 2 to 3% loss. If I'm going to own shares of something, I'll do a ratio spread, and then if I own it, I'll repair it. But that's a good question. Yep. Okay, cool. All right. How's everybody doing today? We good? Who grabbed profit out of the bear call spread this morning? That was a quick winner. So DPP update. We're taking another winner. That gives us that's 8 for 8 for the week. It's not bad. DPP update. Bear call spread was entry 125 credit, closed 25 debit. Nice quick win for $1 per contract. And no complaints. Okay. Also, waterfall income looking better and better. This trades up 140 out of a max 160. The probability of profit on this one is going up as we speak, so that's good going into tomorrow's expiration. The 65, we're now trading for we have like a 90% chance of profit on our trade tomorrow. So unless price is going to come all the way back up to like 64.90, 6,500 today, which it can, if you want to protect profit on this one, it's probably not a bad idea. So your 160 credit, we're up 130 bucks. I'll see if I can get filled here. We're at 30-cent debit. I'm going to try to get 25-cent debit. I talked about that on Monday during class. So still not filling. It's like, would Friday be? Are we going to have like a wacky August end of the month? Maybe. If you expect a correction in the market, does that affect how soon you take profit on waterfall trades? No, no, because if you're worried about that, I mean, I still think small caps do pretty well, Bill. Even if we have like a little bit of a correction, I think small caps are fine. That's why we went out to January. That's why we went out like December, January. If small caps have a correction, I still think like if we find a reflexive rally, they go back up and we try to get to all-time highs. That was the point of taking that trade on Russell. Is a pullback is understandable. I mean, look, we could pull back to any of this dynamic support. We could pull back and then rally. Right? If we're trying to play the catch-up game for Russell, we get to these highs. Our strikes are in the 220s, right? So we're okay. And if we want to take some of that profit, I mean, obviously there's no harm in taking profit. So I'm going to keep an eye on this one for today. That's going to pend at 25 cents. I'm going to try to put this in for like 15 cents. Maybe this fills later on today, 15 cents. Let's go into our Russell trades for waterfall income. I'm going to switch gears and talk waterfall in a second. I'm also doing a masterclass tomorrow. So I'm doing pinch point scanner today at 1:30 for day 3, and then a waterfall income class tomorrow. Okay. So we have, right now I'm up about $200 on waterfall trades for the Russell. This one's up 34%. This one's up 27. This one's up 14. Our take profits we've talked about in class, 30, 40, 50%. You have a 36, you got a 29. If that's good enough, you're welcome to take the profit. I'm going to ride these out a little bit longer. This is December, January. I think the market can stay above these levels. If we pull back to, 225 or 220, 225, 220, it's like we'd have to have a pullback. Markets can pull back, right? We could pull back, 4 to 5%, still be okay. We could pull back, 6 to 7%, still be okay. So unless the Russell is going to roll over and take away this trend, I mean, the all-time highs are right here. If we're going to roll over and take away this trend, then sure, we're at some risk. But if all this is going to do is correct, find support, find dynamic support, and then work its way back up, we find all-time highs. That I showed this yesterday in my final hour session, that big catch-up trade where small caps can finally get up to outperforming compared to the NASDAQ and the S&P. I think all-time highs are achievable. So that's why I'm staying long. Okay. If I close them out, Dre's, then I'll close them out. I haven't touched them yet. If I close them out, I will post it. Okay. So I will tell you this: if your waterfall income, the trade that I'm taking for this 29th expiration, which is the S&P, this waterfall income trade that expires tomorrow, it's up $135 out of the max 160. Okay. So if you want to take that profit, you are not going to hurt my feelings. I'm putting a debit in at 15 cents, which gives me 145 bucks. Okay. I'm going to see if that will get filled today. If it does, great. Where would I be mad at myself tomorrow if somehow price goes up to like 65.25, 65.30 tomorrow and we get a $500 profit trap? Then I'll be pissed because that would be a $600 winner versus a $150 winner. But I don't trade that way. It's just like I can be upset, I can be annoyed, but taking profits, take a profit, I'll be fine. Okay, so I'm setting to take profit there 15 cents. If it gets closed, then I'll issue the alert. Okay. All right. Couple more things. Let me get into some waterfall income. We'll talk through this in just a moment. Just doing a quick spot check on the day. So 20 points on the day, pretty tight here at the top. Are we going to roll over on the day? Yes, no, maybe so. I'm still looking to see, could I pull in some premium at 65? Probably not as much as I did this morning. If I look at the trades right now for SPX, a 6,500 is still offering. I mean, this isn't bad. If I can get this trade maybe filled, maybe take the same trade. I can do like a 65.10 by 15. I don't know, maybe. Do I have a 10 by 20 right now? I've got a 10 by 15 closed. I have a 20 by 25, a 10 by 15. Okay, so if I do another 10 and let's go 10 by 20 for $2. Okay, so I'll take the screenshot here. These are trades that I'm still going to have pending. So 65.20 by 25, 65.25 by 35. Those are 5 wide and 10 wide. So this one, 5 wide hasn't been filled. 10 wide hasn't been filled. 10 wide hasn't been filled. This trade. Oh, that's my waterfall. Okay, so I'm going to trim this up. So right here, let me take this away. All right, so all my SPX filled orders, and I'm gonna trim this. So I'll put this in daily profit play. So this trade can be cut out because this is for waterfall income. So I'll cut this trade out right here, and I'll cut that profit there. So now all I'm left with are my current pending orders. So 65.20 by 25 for $1.25 hasn't been filled. A 25 by 35 for $2 hasn't been filled. A 30 by 40 for $2 hasn't been filled. A 10 by 20 for $2 hasn't been filled. If they get filled, I'll take these trades. Okay, so I'm going to put this as a screenshot in for daily profit play alerts. We hit one nice winner on the bear call spread. I have pending orders for the day. More bear call spreads at an acceptable credit level. If any are filled, I'll post an alert. Okay, so those are all my pending orders for the day. If price doesn't do anything, meaning price doesn't go up any higher, let's say that we've already put in kind of the intraday top of the day at 64.95, then none of these trades will fill. If price works its way back up to the highs today, we could still get filled. I'm not trying to sell anything at 65 or 65.05. I'm trying to start here at 65.10, 65.20, and we'll see what price does. If price falls for the day, and it is what it is, I won't get filled. It's fine. Okay. All right. Kathy, where do I go to get better information? Yeah, right here. So better information, if you're looking at, any of my services or the trades that I'm throwing out, daily profit play, waterfall income, crash insurance masterclass, project options edge. These are all things that I talk about, day in, day out. If you have any questions on this stuff, you can send an email to support@prosperitypub.com. Okay. Support@prosperitypub.com. And you can just ask them about my services. It's going to be this. So you want to trade with me every single day. You want to trade with me every single week. You want to trade with me every single week. This is all earnings catalysts and major news. This is index related for high reward, low risk. This is my pinch point scanner that I've been doing a 3-day masterclass in this week. These are spoon-fed volatility trades. My scanner finds like these great setups. We're in 5 new trades this week with pinch point. Crash insurance masterclass. This is how I hedge my portfolio. I just took a trade on that today. $500 risk for a $15,000 profit. Obviously, I'm not planning on making $15,000, but if I can take $500 and turn it into $2,000, $3,000, $4,000, $5,000, that's still pretty good. That's a pretty good hedge. And then Project Options Edge is, when you're kind of ready for like a little bit more of the advanced stuff, maybe a little more buying power, campaign trades, a little bit more sophisticated strategies, willing to own some shares of stuff, then Project Options Edge. And then these are just bonus education. Quick guides, $27, full course, $497. I have these on an on-demand page that people can look at this on my Discord. You can check those out. Pinch point should be, Greg, should be available. Okay. On that note, I'm going to switch gears to waterfall income. I do have a masterclass. I'm going to throw in an impromptu masterclass tomorrow. So before I officially do this, Friday at 1:30 p.m. I will be doing a 1-day workshop on my waterfall income. And then on Monday at 12:30 p.m., we will be trading together for a live trading session. So you want to join me for a classroom, come in brand new. I'll teach you the strategy. We'll review the core strategy 1 and 2. And then Monday at 12:30, we will trade together like we always do. Okay. All right. So that's where we're at right now. This is a strategy that going back 12 years has had a 97% win rate. We've been trading it live since last September. We're averaging 93%. It's one of my favorite strategies. I literally show up and trade the markets every single week. It's one of the few strategies that when I take this trade, I blanket trade this for all of my accounts. That's how much I trust it. That's how confident I am in it. When I'm ready to kind of passively trade and be a little bit less active and not be in the markets every single day, this is probably my go-to strategy. I mean, I'll put it this way. If I could go back and test this strategy for 50 years of options trading, I would, because I feel like it'd be still producing the same type of great returns. But I can go back 12 years with options data, and we've had 7 corrections of 20+%. I'll repeat that. In the last 12 years, we've had 7 corrections of over 20+%. And we've still maintained a